Just 6 minutes past the hour of 8 a.m. here on Church of Uganda Family TV. Thank you so much for waking up with us today. Now, today with me in studio, we are going to be discussing, I have Florence, and we'll be discussing insurance. What do you know about insurance? Are you like me who just knows the one of the car? Are there other insurances? I don't know. But we'll be discussing insurance and much more. Florence, thank you so much for coming.
Welcome.
All right, now you'll just help me introduce yourself properly. I might not do you justice. I'm sure your CV is, but yeah, just introduce yourself. Who are you? Where are you from? Yeah.
Okay. Thank you very much, Byron. My name is Florence Nabakiibi. I work with ICEA Life Assurance Company. I'm the manager for life and pensions, and I've been practicing insurance for over 10 years now. Mm-hmm. It's a great pleasure to be here. Okay. Yeah, I enjoy talking about insurance and also getting people interested in it. So it's a great pleasure to be here.
Yeah, that's the aim, that people are interested in it at the end of this discussion. But first of all, for those of us who don't understand what insurance is, break it down for us. What is insurance?
Okay. Insurance is simple, but it's also complex because people look at it as a very big term. Mm-hmm. But insurance is a form of risk transfer. You have a risk you're facing as an individual. You mm-hmm. have options. You mm-hmm. can either keep the risk to yourself, you can transfer the risk to another person, you can even pretend the risk doesn't exist until it comes upon you. Yeah. So insurance is one of the best risk transfer mechanisms that is out there, where someone has a risk they're facing. You mentioned your car, for example. Mm-hmm. I'll start with that because it's the easiest. Mm. You have your car on the road. You mm-hmm. have risks. The car could be knocked. Even you could knock someone. Yeah. Your car could be damaged. You could kill a person. There are so many risks outside. Just you putting your car on the road. Yeah. Leave alone the requirement of third party. Yeah. But even without that requirement, there are risks. Mm-hmm. So you as an individual, you have options. You can say, for me, if I knock someone, I have all the money, I'll pay mm-hmm. them. Or you can pretend and say, for me, I'm very careful, I'll never knock anyone. But mm-hmm. remember, it's not entirely up to you. Yeah. Or you could say, I don't have the money if I knocked someone, or if they knocked me, or if my car got damaged, I don't have the money for repairs. Yes. So what do? I exchange that risk for mm-hmm. a small fee that I know. Okay. And I pay that fee annually so that if anything happens, then the insurance company can compensate me. So it's a risk transfer mechanism. Yes.
So it means for us who really don't like risk, insurance is a good mechanism for us to consider. Yeah. Okay. That should be hopeful. But then how does it work then? How do I transfer the risk? How does insurance work exactly?
Okay. So just to take you back a bit, other than just the risk transfer, the other importance of insurance is it's good for financial planning. So even if you have the money, if you knocked someone, at that point you may be a businessman, maybe you don't have even money at that time to fix your car, you park it for 2 months.
Yeah.
So you may feel like, yeah, I have the money, but you don't know when the incident will happen.
Yeah.
So what insurance helps with is that uncertainty. A risk may happen, but also you don't know when it will happen. So when it does happen, even if you don't have money at that time, the insurance company then comes in and compensates you. So good financial planning also involves insurance, because then you don't have to either break your bank or terminate some kind of business you're doing to be able to cover the financial gap that you're facing at that time. Yeah, so how insurance works, insurance companies do rely on what we call the law of large numbers.
Okay.
We have a number of people we take on. We charge them a very small fee. I'll give an example. If you're insuring your car, we just charge you 4% of the value.
Okay.
So if your car is 20 million, it will just be 4%. That's the minimum rate in the market. It's regulated.
Okay.
Yeah, so we'll just charge you that. Now, in the event that your car is entirely shattered, the insurance company then will compensate you the full value of your car. Yet you only paid 4%.
Okay.
So the premiums of the many, they are used to then cater for the losses of the few. That is how insurance works. So you pay a small premium, and then the insurance company takes on the financial loss that you will incur. Yes.
Okay. Because I was going to ask you, kati mwe mufunira muwa, how do you accept to take on all the risk? So you're talking about large numbers.
Yes. And then not everyone you've insured in that year will have an accident.
Yes.
So you may insure maybe 10,000 people. Byron may not have an accident this year.
Yeah.
Someone else may have, or may have a partial accident, things like that. So we need so many people to get insured to actually bring premiums down. Because if there are few, then that means the risk is shared just by a few, and premiums will be high. So you find that in markets where insurance penetration is so good, premiums actually really come down. Yeah.
All right. You're using some terms there, but before we go into those terms, apart from risk management and financial, what did you call it? Financial planning. Are there other advantages of insurance that would help me either in my day-to-day life, apart from those two?
So insurance is really, really broad, and we have different kinds of insurance. We have insurance for your assets, for your businesses. You could have also a business, maybe you could get robbed or something, or employees can steal from you. There's even that kind of...
there is also that kind of insurance?
Yes, or you could even be a professional and you make a mistake, or you're negligent and you're sued. We also have those kinds of covers for professionals where you've made a wrong decision, or you are a bit negligent, and then you're covered. But other than that, we also have... So most of the covers I've talked about first are what we call short-term. So short-term covers are the ones where you pay for every year. But we also have long-term covers. And personally, I'm a specialist in long-term. So for long-term, we mainly look at life cover, and we look at family protection. In the event that you're not there and you have a young family, how are your children going to go to school? So we also have products that cater for things like education, for funeral cover, also investment. Also insurance helps you in investment, and that's covered under the long-term. So there you're paying premiums for a longer period of time, other than just paying annually. Because if you're taking an education policy, your child may not study in 1 year, probably 10 or 15. So we look at a futuristic approach, and that falls under the long term. Then of course there's also the medical, which helps you with medical bills. Which was
going to be my next point. I was going to say, so where does medical fall in? Because we have seen, particularly during COVID, oxygen was... Those ends, medical bills were in the hundreds of millions for some people, and they were thinking, my NSSF money, my what? And then in my mind I was thinking, but if we had insurance, wouldn't it cover that? So medical, that it falls also under long term.
So medical is a category of its own. It's a short-term cover, but the way we are regulated by IRA, that is the Insurance Regulatory Authority of Uganda. So companies are required to do either short-term or long-term. But medical is a special category. It can either be underwritten by a short-term company or a long-term, but it's a short-term cover because it's annual. You renew your policy every year. But even a life company can write medical, even a non-life or a general company, as long as it's licensed. So the regulator allows any of them to write it, but it's a short-term cover.
All right. And I want to think that, so does that mean every time I fall sick, malaria insurance got me? I have flu insurance got me, right? Is that the way it works?
Okay, so one thing you have to know about insurance, it's first of all, it's a very regulated market, and then also there's a requirement for clarity in terms of what a client is covered for.
Okay.
So when you take on cover, we do issue you what we call a policy document in our terms, but a policy document is just a contract. It stipulates what you're covered for, and it will also have limits. Okay. So you'll not find a policy which just says we cover anything, no? It will have specified, yes, what is covered and limits. So we shall say, let's say malaria, what you mentioned, and flu, those will be covered under outpatient. So you'll have a limit for outpatient. Let me give an example, 5 million higher. So every time you go to the hospital, we keep deducting from that limit.
Okay.
Then you also have what we call an inpatient limit. So an inpatient limit is where you're admitted now. So every time you're admitted, we keep deducting. Remember, this is a short-term policy.
Yeah.
So if you exhaust your limits before the year ends, either you pay a top-up premium for the insurer to extend, or you just wait for renewal. Then come renewal, you buy another policy. So you will know in advance that if I have malaria or whatever, I can use up to this amount. Up to this amount. Yes.
It's in your contract or whatever.
Yes. And usually the higher the limits, of course, the more premium you pay.
Yeah.
Yes.
All right. Hey, we have had the word premium a lot. Allow me ask it now. Premium. What's premium? What does it mean?
Okay. Premium is a simple term for the fee you pay for insurance. It's like how you say school fees.
Okay.
So premium is what you pay in exchange. Remember, in insurance, you're buying a promise. It's different from when you go to a cupboard, you're buying a tangible.
You're buying a promise.
Yes. And that's what makes insurance a bit complex to the market. So when you go to a bond or a shop, you're buying something tangible. You check it. If it's a dress, you try it on.
Yes.
But for insurance, you're buying a promise. The insurance company is promising that if any of these events happens to you, this is how I will be there for you to this extent. Yes. So what you pay in exchange for the promise is a premium. And a premium, it's just a fee that you pay to the company, either annually. For the short terms, customers pay annually. For the long term, like the education policies, because they're really long term, we break them down in the frequency of how a customer earns. So you'll find if you have like an education policy, you'll be paying every month. Although some clients can pay quarterly or annually, those are really few. Majority will pay every month because they earn monthly, and then it's a long-term contract.
Okay.
Yeah.
All right. We'll get to that later. But allow me think like someone who insurance umuntu wawansi. Let me speak for that one. And I'm thinking, guys, let's say I'm a young father, got married like last year, about 1 year into marriage, and I'm thinking, I earn say 500k a month, and I'm thinking, isn't a father, or if isn't a man like that one, or a family like that one, doesn't it look at insurance then as a luxury rather than why would a guy like that one then consider insurance? Why is it important for that particular guy to consider insurance?
So insurance is important for everyone. And by the way, even before I go to the family you talked about, we have people who even call micro. We have a certain class of insurance called micro insurance. They're very, very bottom of the pyramid. Someone who earns very little, someone who is not sure if they'll earn tomorrow. Like if I don't go to town, there is no money. I earn only money for that day.
Yes.
Even for that person,
you have a product for that person.
We have products that particular category is called micro, the micro market.
Okay.
So we also design products for them that fit in their lifestyle, because they also face risks.
Yes.
Even that person falls sick. Even that person wants their children to go to school. Even them, they want to save, because like I told you, in the long term, we have some savings and investment products. So everyone faces risk, whether you're rich or poor or you're really at the bottom, you face risks, and there are different classes of insurance that would then fit in your bracket. Now for the person you're talking about, the young family, maybe someone earns 500,000 and they feel like maybe insurance is not a priority. The best way to think about it is, what if I'm not there, the breadwinner, then what happens? And that's where we start from. Even when we're engaging customers, we start from needs assessment. So, someone may feel like, I don't need insurance, but think about it. If you're out of the picture, then what happens?
Then what happens?
Will your children maintain even that modest life you're giving them? Will they really maintain it, or they'll have to go to the village? What about at the end of the 10 years? Will you have some money maybe to start a business? At the point you retire, will you have saved some money? Because retirement comes upon everyone.
True.
So risks face everyone, and for each person, what we do is that we make sure we tailor make something that fits within.
Okay.
Yes.
So,
their budget.
so you don't chase me away if you welcome everyone,
Yes.
and then you tailor make and say, okay, you have a business in Chikubo. How
Yeah.
can we then ensure
Yes.
that business
Yes.
to make sure that even when, like you said,
Yes.
if people steal from you, if you don't get payments, all right, and every one of them pays a different premium.
Yes, so for some classes, you'll find that the premiums are regulated, especially for the short term.
Okay.
You'll find like if it's motor private, the rate is the same. What will change is we apply the rate on the value of your car. So if your car is 20 million and mine is 10, I will pay less, but the rate is the same.
Okay. So
Same
the rate
to-
is 4%.
Yes, if it's, let's say, a commercial car, it's 6%. So also depending
okay.
on the value of the car, the person who has a more expensive car will pay more than the person who has, will pay. But for other products, they'll be designed by the insurance company and valued and then approved by the regulator.
Okay. Allow me talk about a particular type of insurance that many find very weird: life insurance. Insuring against, is it on your life, against your life? What do we insure? We insure on.
Yes, we insure your life. Yeah.
Yes. What does that mean?
Okay.
Life insurance, because you told me you deal in long term, and I want to think life is really
Yes.
a long term thing. So, how do you insure my life? How does it work? Life insurance.
So to just go back a little bit, when we're talking about insurance, we are looking at risks. And we are looking at risks. What we call an insurable risk is a risk that may or may not happen. The example of your car, you may or you may not knock. You can even spend 3 cars without knocking.
Yeah.
And the biggest mistake customers do is that when a risk hasn't happened, they're like, why am I paying
But why am I
premium?
paying this?
And then bad luck, the 4th year when you have not paid your premium is when the
the day.
accident happens
Yeah.
and you're not covered, and then so it's always encouraged that you're insured all the time. Now when we go to life, the biggest risk we cover is actually death. Now
Okay.
you'll ask me, but death will happen. I mean, you can't prevent it from happening.
Yeah.
So what we cover is the risk of early death. So
Okay.
for any person, as long as you live a long life, then you're able to take care of your family. But
Yes.
what happens if someone dies young? You have a family that depends on you. They have a certain life you want them to live. You have children, they need to go to school.
Yeah.
You have needs at home. So what the protection we give is financial provision in the event of early death.
Early death.
Yes.
Okay.
So if you die before your children finish school, will there be some kind of money to see them through? These days people can no longer go to relatives. Everyone is overwhelmed. They have enough.
Yes, everyone has
So you
enough.
have to take care of yourself whether you're there or not. So that is how life insurance comes in. The other part it plays is investments and savings. You know, we have a very poor savings culture.
True.
So you may ask, what if I've paid my premium for 15 years and nothing has happened to me? So for life products, they also help you to put aside a buffer. So even at that point when nothing has happened to you, for most of the products, there are some that don't pay anything, but there are those that most of them will give you a return at the end. So you can then use that money even to pay for your children's uni. You can start a business. You can complete your home. You can do anything you want with the money. Yeah.
So it's not entirely when I don't use that money, it stays with you.
So the life products have 2 purposes. First is they cover the risk of early death. Second is they provide a forum for you to save and invest over a long period of time. So the benefits will be paid out for you on what happens first, either early death or if you reach the end of the policy, then you receive the money.
Okay. So it's it's not a bad it's not like a bad idea to say that it's something we should all consider. So can everyone and anyone consider life? If someone was to come to you and say, I want insurance, but I'm not sure which one.
Okay.
How do you then help them? How do you guide them?
So that's a very important question, and maybe to disappoint in our terms, we say life insurance is sold and not bought.
Yeah.
So you find that companies will have so many foot soldiers who go out there. People will find you at your shop where they start interesting you about insurance.
Yeah.
So even in that conversation, we do what we call a needs analysis. Someone will try to find out, like what you told me earlier, maybe I have a family, I earn 500,000.
Yeah.
Someone will try and ask you, are you married? Are you single? Do you have children? Where do they study? Which universities do you want them? Those are all thought-provoking questions.
Yeah.
Do you have a side business? You could be earning that, but you have rentals.
Yes.
And maybe your total income is 2 million, so maybe you can afford to pay a bit more. Yeah. So we do that in the needs assessment discussion.
Okay.
And also key to note is that when you take a life policy, because it's long term, you have to keep it in force. So you need to buy a policy where you can afford to pay premium every month.
Okay.
For the 10 or 15. But even now we have products that are 5 years. So the shortest is 5. But products can go even up to 25 years.
Eish.
Yeah.
All right.
Because it's really futuristic. If you're maybe targeting something for retirement or then you need to look at a period like that. Yeah.
I like the needs assessment plan because my needs might not be necessarily your needs.
Exactly.
Me, I might be thinking about my children. You're thinking about I want to drive a nice car, have a nice house by age 35, which is all right. Okay, cool. Before we go in for a break, someone asked me this question, and allow me ask you now that I have someone here with me. They have motor insurance, and they're in Uganda, but they usually drive to Kenya and sometimes to Rwanda, and usually their question is: so if they got an accident in another country, would you still cover them even when the geographical location has changed? Same for medical, same for if I traveled, let's say, for business in Dubai and I feel sick there and got admitted there, does then insurance cover me that side? Or
okay. So key to maybe to inform the public about is that when you're buying cover, it's okay. Cover is the insurance.
Yes,
I hope I'm not
buying
confused.
insurance.
Yes. When you're buying insurance, it's very important to really disclose all the facts to the insurance company.
Okay.
I'll give you a simple example. If I have my car and I use it for Uber, and because I know the rate for commercial, because commercial is when you use your car to generate money.
Yes.
But I lie that it's personal because I know I'll pay 4% instead of 6%.
Okay.
If that car gets an accident, I'll have an issue because I lied. Yeah, so it's very important that when you're buying an insurance policy, you're very honest. If you're going to drive your car across the border, so the typical third party and comprehensive we have, the geographical location is Uganda.
Yeah.
So if you have if you're traveling outside, you'll not be covered. You'll be required to buy a COMESA sticker. So the COMESA sticker is the one that will cover you.
Okay.
At that point, when you're going to travel, you have to declare for how long, because it also has a time limit. I think it's 3 months.
Okay.
Like you shouldn't be away for more than that.
More than that.
Yeah, you'll have to renew. If you're still away, then you call your insurer, you keep renewing.
Okay.
So that is very critical. If you're traveling, contact with your car, contact your insurer, tell them I'm going to Kenya, I'm going to do this for 2 weeks, be honest. They tell you, okay, for those 2 weeks, we need you to pay this additional premium, and you need this sticker even to cross the border.
Yes.
Yeah, so they'll be open with you. They'll tell you what you need to do, so that if in case there's a claim, then it is honored. Same to do with medical. Most of the medical policies we have, you find they cover locally because even the facilities they partner with. Yeah, but when you have a scenario, I've seen cases where like someone needs to be maybe treated abroad, and then the insurance company will give like a waiver or liaise with that particular facility and pay them. Yeah, but if you're traveling, let's say for holiday or work or whatever, then you're required to buy a separate travel cover. That's different from if you're sick here and you need to go and get treatment elsewhere. So you'll need to buy travel cover. You declare whether it's a holiday, are you going to school for 1 year, maybe in the UK or where? Then you buy that particular cover. So it's very important that you have that discussion with your insurer.
Okay. Yeah. So I'm hearing a lot of be honest, tell the truth, and say the truth is, me, I go to Dubai every week. So in case anything happens to me in Dubai, will you help me or not? Particularly for those in Chikubo who travel a lot to get things and whatnot. All right. We're going to go in for a very, very short break. But when we come back, we'll be talking more on insurance and some of the questions you've been asking about insurance. How do we get it? How do we access it? How much money do I need even to get it and whatnot? So do not go anywhere. This is Church of Uganda Family TV. We'll see you after the break.
Brethren, yes, we can. We can clear the debt of church house. And I want to invite you to give generously to the love gift. May God bless you as you give.
closer to the normal way of life. Ekya COVID-19 kijja kugwa.
Kinyumira. Whether it is Katogo, Chikomando, Rolex Majasa to Nyanya Mbisi. Man, wherever I am, I enjoy Chinayu with your TV channels on my phone.
Enjoy a new world of entertainment with over 80 TV and radio channels, plus movies from wherever you are. Download the Yo TV Channels app from your app store and enjoy 30 days of free streaming with MTN.
Yo TV Channels, the power is in your hands.
Right, thank you so much for staying with us. This is Family TV. Enriching lives every single day is what we are about. And today we want to enrich your life by talking about insurance and the benefits of insurance. And today with me I have Florence from ICEA. And we are discussing insurance. What is insurance and what not? Florence, thank you again for joining us this morning.
It's a pleasure.
Yes, so before the show, we were discussing a lot of things. We went from what's premium to the benefits of insurance, but now I want us to dive a little bit more into the actual products, that what can people actually engage in. And I'll start with individual. I'm an individual. What products are there for me as an individual, insurance products?
Okay. So as an individual, there are a number of products that you can take. When we're doing a needs assessment, we start by looking at your assets. What do you own?
Okay.
Yeah, we can cover your car. For example, most people take third party, and many of them actually buy it because they fear a police officer to check them. They don't think of the bigger consequences of if they actually knocked a person, like how they would pay for that. But the better deal of that is taking comprehensive, because comprehensive also covers you as the driver. It covers your car. In the event that your car is damaged or totally destroyed, the company then compensates you. I've seen people whose cars are totally shattered and they didn't have cover and they spent 2 years without a car. Yeah.
And
yet you could avoid that.
Yeah.
Yes.
So apart from the car, individual, I'm sure there are other policies.
Yes. Yes, so there are also individual medical covers. Your employer may not be giving you medical, or you may be self-employed. You can also take an individual medical insurance cover. There are also home protection policies, like a homeowner. You can cover the contents. You can also cover the building of your home. Yeah.
All right. Allow me then talk about business now. Because I've seen many businesses struggle. We have had businesses in downtown here catching fire, buildings catching fire, and products worth millions lost. Do you also have a special package for businessmen or business people?
Okay, so for businesses, we also cover the assets. You could have, say, a fleet of cars for your business. We do have that motor policy for a fleet of vehicles, may be there for the company. Then we also have like fire policies for the buildings and all that. Yeah, and then also I mentioned earlier that employees could drop from you. We have such covers of covering infidelity and all that for employees. Yes.
All right.
And then also, of course, the professional indemnity that I talked about. Yeah, those covers are also available.
Okay.
Yeah. So the ones I've mainly talked about are the non-life or the short-term covers. But also on the life side, we have covers for businesses and for individuals as well.
Okay.
Yeah.
That life covers, again, to remind the people, is more long-term.
Yes, it's more long-term. And also when I was talking about life, I didn't really go into depth. I just mentioned that the main cover is death, but we have a lot of other risks that we cover in there, because many times when you tell a customer in the event of death, this will happen, they're like, I'm not about to die, but we have so many other benefits in there. Yes.
In there.
The first is, like I mentioned earlier, is that even on survival, you then get the value of your policy, the benefits that the company promised in the event you die early. They are paid to you on survival. So you can use that money either to start a business, either to further your children's education, complete your retirement home, whatever you want. We also have other benefits under the policy, which include like permanent total disability. If you're incapacitated completely, the policy will still pay you. We also
that's under life again.
Yes.
Okay.
We also have a benefit which we call critical illness. So we have some conditions in the policy. I'll give an example, like cancer or stroke or heart attack. If you're diagnosed with any of those conditions, they really take a lot of money to treat.
True.
So if you have a life policy as an individual, it will pay you money, and then you can add that either to your medical. If you don't have a medical, you can use that money then to either seek treatment here or go abroad.
Still under the life.
Yes. Then also we have a funeral benefit under the policy. The funeral benefit helps in terms of the burial arrangements, and that one the company will usually pay it in 48 hours to help the families give you a decent send-off.
Oh, dope.
Yeah.
Now me talk, earlier on we were seeing the elderly being taken to Ginger to chill and remove COVID stress. But for the retirement people, those who are retired, or even when can I start paying for retirement now? Also, first help me talk about the products for retirement. What products are there for people who are retired? But also, when should, for example, can I start paying for retirement benefits now, so that by the time I don't know the retirement age, 55, 45, I can easily get the benefits.
Okay. So that is very pertinent. So in terms of retirement planning, we advise people to start planning for retirement as soon as you start working.
Okay.
Because if you push it for later, the burden is going to be so big for you, you'll not be able to get the money. Yet if you start early, you can contribute very, very little. Now, most of our population actually is not subscribed to NSSF. So you'll find that people are working, but they have nothing set aside, and yet retirement will surely come. So life companies also do manage retirement benefits, and we also have individual products and also group products. So you'll find some employers also take out for employees over and above NSSF. They give them a voluntary scheme where they contribute for you something. But even you as an individual, you can start a retirement scheme for yourself.
Okay.
And you start putting aside money every month. Now, the other advantage we have at ICEA is that once you get to retirement, we can enable you to continue living the way you have been living when you're working, because we have an annuity product. And how that annuity product works is that once you've retired, we expect that you have a lump sum you've accumulated, maybe from NSSF or you've gotten from your employer. You've been working and saving up. So for most people, when they get that money, even from study done from NSSF, 85% in the first 3 years have finished all of it. So you get depressed, you're lonely, you're broke, and you even start hating your children. So what the annuity plan does for you is that when you retire, you can give us part of that money, all of it if you wish, and then we translate that into monthly payments for you for the rest of your life. So for all of your life, you will be getting a salary until God calls you, whether you're 80. And study shows that post-retirement, you need at least 60% of your pre-retirement. So if your last salary was 1 million before you retired, at least aim to get 600,000 every month. You'll be comfortable, because now you don't have transport. Maybe you've left a city, kids are out of school, you can be comfortable on 600. So for you to get there, you need to start early. If you think about it, when you're 2 years to retirement, you'll even get depressed. That's why you see people go back and change their dates of birth. They want to extend.
They want to extend. They're like Oh, that's nice. Then in case of death, then what happens on that monthly
for the annuity
payment?
product?
Yes.
Okay, so for the annuity product, what we do, we have what we call a guarantee period, because of course some customers fear, they're like, what if I die early? Remember, for the first life products I talked about, the risk we cover is early death, that if I die too early and I leave my children, they won't have anything. Now for a retired person, the risk you have is longevity. Yes, it's good to live long, but you want to live long happy. You can take care of your medical bills, you can buy a newspaper, you can go to the town and visit your children and they've given birth and all. So the risk of longevity is what we take care of, that even for as long as you live, you will have a steady income. So what we do for, in case, because someone may say, what if I've just bought my annuity plan, then 6 months I die, I've given you 100 million. So to safeguard that, we have what we call a guarantee period. It starts from 10 years, it can go even up to 20. So what that guarantee period does, it assures you of payments for that minimum period. So if you've taken a guarantee period of 10 years, that means the minimum period the company will pay you is 10. So that will mean if you died after 6 months, we'll continue paying your family for up to the 10 years. And then we stop. But as long as you're alive, whether it's after 50 years, we continue paying you. Right now we have annuitants on our books. One is like 83, another is like 92. They retired like a long time ago,
but they're still getting their
so
money.
For as long as you're alive, the annuity plan will pay you. But if you die early, then it will stop. But the measure we have is the guarantee period. You can take a guarantee period of 10 years or 15 or 20, so that even if you've died off early, at least the payments will continue up to that period, and then they stop.
All right. When would you recommend someone to start considering insurance? Is it when they're at campus? Is it when they're at school? Is it when they have started? Actually, you mentioned. Is it when they have started working? Is it when they have accumulated a lot of money? When would you recommend someone to start thinking about insurance?
Okay, as long as someone has any form of income, they can actually take out a policy. I have friends at the university who would never spend their, we used to call it faculty allowance. They would actually invest it, and I thought it was a very good thing. There are students on university who have excess money. I mean, you can afford to put aside 100,000. So if you take a policy of 5 years and you've started it in first year, by third year, you're on the third year, and then 2 years later, you're getting your benefits in a lump sum, which you can use to do something. But for most people, as soon as you start working, of course, the needs are different, and also your needs keep changing with time. If you take a policy right on your first job, maybe you don't have a family, you could have taken a policy just for yourself. Along the way, as you keep going on, you have a family or even earning better, you can keep taking more policies. Yeah, we don't have over insurance for, especially for life. So you can keep, as your needs change, you keep adjusting. You can buy more cover as other policies are maturing, you take another one.
Because I was about to ask, is it if I bought for like in an individual policy, if I got married, can I come and say, guys, I'm no longer an individual, I'm now married, so can you remove this one or add it onto this one? That's something you can do.
Okay, so we have two scenarios for you. You may have taken a policy when you are single and you are earning so little.
Okay.
Don't cancel your policy, continue with it until it ends, you'll get the benefits. However, you can add your family as beneficiaries. Maybe that time you put your mom. You're like, if anything happens to me, I want my mom or my sister to get the money. But now you have a wife, maybe, and a child. You're like, now I want to change the beneficiaries.
Okay.
So the person who gets the money.
But you're saying wait it out.
Yes, you wait it out. Now you may need another policy. Maybe now you want an education policy. So you take another, because they'll mature at different times.
True.
The other one, once it matures, it pays you. You can also take, now when you have a baby, you're like, let me take an education. Let me also take a medical policy for the family. You can, as your needs keep changing, you also keep evolving.
Is there something like over getting a policy? Is there like a maximum, like, guys, if you have 5 policies, you stay there. You can't get 10.
Okay, so for the short term, there would be something like over-insurance, if I may use that term. For example, you can't insure your car in ICEA, Jubilee, Sanlam, and then when you have an accident, each one pays you 20 million. That will not happen, because you would actually be making profit from a contract, which is not acceptable. Okay. So if such a case happened, then only one company would pay you, then they share the loss among themselves. Okay. So there you would not over-benefit. But for life policies, we don't have over-insurance. However, when you're buying cover, we do a financial assessment on you.
Okay.
because someone may also overstate the need. Like you shouldn't be more valuable dead than alive. You should not be attractive for people to kill, because remember
Yeah.
the life policies, they pay you on death. So if you have too much cover, like you can't even buy food at home, and yet there's a bill on your head, someone can kill you just to get the money. They're like,
Yeah.
you're more important to us dead than
Then,
alive.
okay.
So we don't want such scenarios. You
Right.
can buy as many life policies as you want, but even as you're buying them, we do an assessment. If you're filling in the form, we'll ask you, do you have any other insurance policy? How much is it? Which, like, we want to assess and see that what you've taken is reasonable within your financial status. It is not
okay.
over
It's not
exaggerated.
over.
Yes.
Okay, then that goes back to what you said earlier, for us to actually be truthful and
exactly.
not come to you and say we earn 5 million yet we earn 500k.
Yes.
And then because we want to accumulate, let's say, a
Yes.
retirement thing, so that we overbill. I get you. All right, we're coming towards the end of the show, and Florence, one, help us again. Where can we go now that we want to buy insurance? I hope now you are ready to engage in insurance and insure your family or your house or your car or whatever. Where can we go, and how do we? Yeah, where can we go? How do we start? Where do we start from?
Okay. So of course I'll start by being very selfish, because I work with ICEA, so it will be the first point I'll direct you to. Our offices are Trenzori Courts.
Okay.
So we have both a short-term company, that is ICEA General, and we have a long-term company,
Okay.
ICEA Life Assurance.
Okay.
But we also have an investment arm. Our company is a group. So
Okay.
we have life assurance, general insurance, and we have asset management. Asset management takes care of investing your money. Private wealth management, if you have money for the organization that you don't plan to use now, it can make money for you as you wait for a project that's coming up. So we have the three companies.
Help us define them. We might not know where should we go.
So the good thing, all of them sit on Renzori Courts.
Okay.
So the general company, that is for your short term. If you
Okay.
have motor or any business risks and the like, you can go to first floor, Renzori Courts. Yeah. Then for the life company, we sit on second floor, Renzori Courts still.
Okay.
So there, if you want your education policies, funeral, retirement benefits,
benefits.
all those
Okay.
needs will be met on second
On
floor
life.
of Renzori
Okay.
Courts. Yes. Then investment sits on ground floor. So if you have, for you just want to invest money, maybe you're a businessman, you only bring things twice a year. You have your money, it's just in the bank, you can bring it, let it make more money for you until your next deal is due. Or you're a school, you're closed, you received school fees, you don't know when you'll open, you can invest that money, it earns money for you, even you as an individual. You can say, I want to invest money, I want to start a farm in 5 years, but I'll eat the money if I keep it on my account.
If I keep it on my account. So
you put it there.
so you also have that
Yes.
arm where I
Yes.
say
Purely investment.
I have like 10 million, can I just give it to you?
Yes.
Then it earns an interest.
Very good interest.
Very good. What
Yes.
define very good?
So on average annually it's about 12%. Yeah, but it's credited on your statement every month. Yeah, and it's a purely investment product. Yeah.
So it means that if I want to get out in 18 months, I can.
Yes, you can. You can take all your money or part of it. You can get more and you add. It has the advantage of flexibility because it's designed for people who want to earn money, but also who may have need for access of the money, and there is no charge for even accessing the money.
Okay. That's dope. Cool. Thank you so much, Florence, for coming today. I hope you people are ready to invest in insurance. But before we go, Florence, I have a policy here that before you go, you encourage anyone who is watching us. Probably they are listening to all these things. They're like, I wish I insured 10 years ago. I wouldn't be in this predicament right now. But people are hopeless. People are, they don't know, they don't have a reason for waking up in the morning. People are a bit discouraged. People have they don't have gas for life. They're thinking, but what's the point for that guy out there who is thinking like that, who is discouraged in that form? Do you have any encouraging words for them?
Okay.
Yeah.
So maybe what I would tell them is that, first of all, I don't think they're tuned in by mistake. Yeah. I think that the reason they are tuned in, maybe God wanted them to hear this message. Yeah, but also I want to encourage anyone who feels discouraged is that it's never too late to start. One story that always encourages me is the guy of KFC, how like he had lost so many jobs. I don't know if you've read about his story. He was a failure at everything. He actually started
he was
KFC
very old. Yeah.
in his retirement. So there is no need to beat yourself up about it. Someone once told me something that stuck, that whenever you hear a message, that was your right time for you. Never feel like it's too late. The time you've had the message was your right time, so you start there and then.
Okay.
Yeah, so just to encourage everyone to not lose hope. There's always a starting point. At least now you know you're not in the dark. Yeah, and then you can always approach us, and we'll be able to guide you through the whole process.
Awesome.
Yeah.
All right, that was Florence from ICEA. I hope now you know a little bit more about insurance. It's not for the wealthy, the elite, the guys in offices. No, even you who has a shop in Chukuvo. Actually, you might need it even more than us. But otherwise, I hope you've learned more about insurance. If you have any questions and whatnot, and you're watching us on Facebook, just drop those questions in the comment section. I'll probably invite Florence again another time to answer them and much more. But thank you so much for staying with us from 6:45 a.m. till now, just about 8 minutes to the hour of 9 a.m. This has been Family TV, and next up we're going in for Kids Vibe. I hope you have a lovely, lovely, lovely Monday. See you tomorrow.
Do you know that you can now enjoy great enriching shows anywhere through the Family TV app? Here is how to download it. Open Play Store on your phone. Search for the Family TV app. Click Install. After installing it, open it and enjoy enriching content anywhere, everywhere, anytime. Family TV, enriching lives.
Easy Change Forex Bureau. We deal in all major foreign currencies like US dollars, British pounds, euros, Kenya shillings, and very many